The crypto market has been chopping ever since the big sell-off for most of the month of October. I mean, we really haven't seen any significant price action so far this month, and we have just been waiting patiently for that. Now, currently, if we are looking at the charts, which right now it's early morning right before the markets open around stocks. So, price action will most likely change a bit by the time that this video does go live. However, right now, currently, most of the space isn't really experiencing any major moves across the board. Yeah, we have some altcoins that are pumping right now. These are some outliers, but beyond that, we are sitting pretty flat across the board for most altcoin charts. But when it comes back down to the price action in the market, Bitcoin hovering around 109K, up about 1.1%, nothing too crazy there. Ethereum closing in on about 3,900, and then XRP still hovering around $2.40. So the market itself, like I said, really no major change since the last time that we talked about a lot of the prices in this market. We're still waiting on something to happen. Now, on top of that, the live view of the current crypto market cap 3.69 trillion. Again, just looking at this for most of October, we could see that there really hasn't been anything exciting happening over the last roughly 23 plus days. So again, the market, pretty boring, pretty frustrating. I get it. I understand it. I was just having a conversation about this in the Discord earlier yesterday, where I was talking about how, yeah, we are getting very frustrated. A lot of people are getting fed up with the price action and fed up hearing that, oh yeah, we will see all season, we will see this, we will see that, and nothing happening. And I understand how annoying that can be. However, this is all a patience game. I've said it many times in the past, time capitulation works way better than price action capitulation, which is what's happening right now. People are getting shaken out simply due to time, not even price action. But we do have a little bit of a mix of both right now in the market, which definitely doesn't help. Now, looking at some of the prices in this market, I just want to open up Bitcoin and XRP. I want to look at Bitcoin first because, again, over the last 7 days, not much has changed here. However, we are starting to create some higher lows, and we did technically hit a higher high going back to the 21st. Yeah, it wasn't anything special, but hey, it was a higher high. This is still very good for structure. I want to see us create more higher highs here, and more so on higher time frame structure. I want to see Bitcoin really start moving up in a big way. Reclaiming 115, almost 116K will definitely be a good start. And then after that, we look at some higher tier levels on the chart, which is like around 117K and then 120K plus. But so far, Bitcoin really not doing too much at all over the last couple of days. And with XRP, I'm sure that at this point you guys already know, yeah, XRP has been extremely boring. There really hasn't been much going on. And just as I've mentioned in the past as well, there's not going to really be any significant price action across the board for any altcoins because of Bitcoin. We need to still see Bitcoin do something here. We want to see Bitcoin reclaim key levels. Now, let's talk about a few things. Number one, the crypto market itself. If we go back to the crypto market itself, we could see that the fear and greed is at around roughly 28. We are still hovering around significant lows. This is telling us that retail is, number one, fearful at this moment. They're scared, they're worried, they're panicked about what happens next. But also on top of that, yes, they are extremely frustrated. They're getting impatient. And this is at a perfect time in the space. Let's actually dive into that. Number one, liquidations. We are constantly seeing more and more liquidations happening almost every other day when it comes back to crypto. Now, I recently made a video talking about how these exchanges like Binance are manipulating the market. Yes, that's still ongoing, and it will continue to ongo unless someone steps in. And what I mean by that is possibly regulators stepping in around these exchanges. But outside of the exchanges, I think that the biggest thing to focus on is those that are liquidating or jumping into leverage positions that are getting liquidated. The issue here is so many people are gambling on these exchanges. Exchanges that have your buy and sell orders and your trade setups fully transparent to those that want to trade against you. I've said it many times. So posts like this, where we have $370+ million being liquidated, this is going to be an ongoing thing. But what's crazy about this is over the last couple days, we have been seeing update after update after update around liquidations, and it feels as if the value that's getting liquidated in these leveraged positions is starting to grow more and more and more. I cannot stress to you guys how important it is to just simply hold spot in this market. You do not need to leverage trade in order to get rich in this market. I'm going to say that right now, and I'm going to stress that as much as possible. Now, on top of this post, we also got a big update from bar chart, which is money market funds. I have been studying money market funds for quite some time. You guys already know that I've been talking about the values tied back to money market funds. We are sitting at $7.5 trillion. This is absolutely insane. This is an all-time high. Why is this so important to focus on if we are holding crypto? Again, we're holding crypto. Who cares about money market funds, right? Well, the fact that $7.5 trillion, which by the way, majority of this is retail. The fact that there's $7.5 trillion just sitting in these money market funds tells us there is a plethora of massive amounts of liquidity out there that has yet to hit this market. And we have over here, money market funds hit record 7.37 trillion before the Fed decides on rate cuts. Money market fund assets reached a record 7.37 trillion in mid-October of this year, driven by high short-term yields from elevated interest rates, according to the investment company Institute. The Federal Reserve is set to cut rates by 25 basis points at its October 29th through the 30th meeting, with 2 additional reductions expected by year end. Now, I'm pretty sure that the October meeting and then also the December meeting are the only 2 that we have going forward right now from the Fed. So, not too sure what they mean by the 2 additional reductions. Maybe they mean, October and then also December, which would make sense. I do suspect the same thing will happen. Now, on top of that, we have which could reduce these yields and encourage investors to move funds into stocks, real estate, gold, and Bitcoin. While social media speculation highlights potential asset rotations, historical data from past recessions shows such shifts have been limited and gradual. Now, again, this is because we have from people like Grant Cardone that the $7.5 trillion sitting in money market funds, if we're starting to witness rates coming down, that money will start to flow outside of money market funds into other areas like gold, Bitcoin, real estate, stocks, etc. Now, I do think that crypto will see a very significant amount of growth, and we'll talk about why here in a second. But first, I want to talk about this update, which we got as well regarding the U.S. Treasury. The U.S. Treasury is now buying back a whopping $1.9 billion worth of its own debt. This is very interesting. Now, this is debt that will mature between 2027 and 2054, but this is also a part of this new program, this expanded program to enhance market liquidity. This is showing us that we are witnessing QE happen with or without the Fed. Now, the most interesting thing about this as well is the Fed is already starting to begin QE, which we have over here from the Coastal Journal. Breaking, Fed quantitative easing begins. Fed balance sheet increased by $10 billion in 2 weeks. The Fed discount window usage, aka lender of last resort, shoots up 238% year over year. This all comes after banks are announcing losses and collateral issues. And again, why is this so important to focus on? Well, here we have from Qcoin. Now, this was written by Mr. Crypto on 10/22nd. When the Fed starts QE, Bitcoin goes parabolic. Will this time be different? And no, I don't believe that it will be. But here we have the QE starting for Bitcoin circled on the chart. We have the Fed balance sheet expanding rapidly to the upside. Yes, Bitcoin will go parabolic, but it's not just about Bitcoin. XRP, the entire crypto market, will go absolutely parabolic because of what the Fed is doing. Now, why does this happen? What exactly is happening with QE? Well, we're starting to see money being printed and flowing into the system. This is, it's essentially the best way that I could describe it is just them opening up the floodgates, right? This is going to support markets to grow even much bigger than they already are, which again, when we think about stocks and crypto and even pretty much any market out there, we've been really following gold as well. Gold has been overcooked, which is why we talked about gold being topped out. But if we're thinking about any of these markets, they all run off of the liquidity cycle, which I've brought up many times over. So if we're going to see the Fed start QE, which is flooding the system with dollars, that's going to support assets going crazier in value. And I'm not the only one that believes this. But also at the same exact time, we have over here, this is from Jesse Myers, the money printer hasn't run this hot since COVID. Global M2 money supply now at $137 trillion was just $129 trillion 6 months ago. Gold has rallied in response. Bitcoin seems to be lagging just as it did in 2020. In 2020, the COVID money printer turned on in March. The M2 grew 21+% by the end of the year in 2020 with a little delay. Bitcoin went on a 6x rally in Q4 of 2020, Q1 of 2021. What will happen over the next 6 months? And again, if we are thinking about this logically, yes, the money printer has been going absolutely wild. We have been studying this. We have been following it. We have over here from Clint Russell, it took more than 200 years for the national debt to hit $1 trillion. The national debt just increased by $1 trillion in the past 70 days. There are no brakes on this train, none. Because again, all of this is a perfect excuse to buy assets because prices and inflation are only going to continue to skyrocket, and the same goes for assets. Yes, I get it, right? When it comes to crypto, we're so concerned about price action. We're so concerned about things pumping in the fastest way possible. But the best way to look at this is the entire environment around crypto still remains extremely bullish. We still have, altcoin ETF approvals that we need to get through. We still have these agencies that are extremely pro crypto, essentially, which are the regulating agencies like the CFTC and even the SEC. Also, at the same exact time, we are witnessing the money printer really kick back on. We know that the Fed is eager to cut rates now, which we're coming up on the next big Fed rate cut decision. And also during this time, we're watching as the crypto space, even though, yes, price action is down in a big way, the crypto space is starting to welcome in more and more institutional players than ever before. And again, I really do think that the main thing that we're looking at here is QE from the Fed and what the Fed does next, because I really think that the Fed is going to make us extremely rich. I know that that sounds crazy to say, but every single time that we've witnessed QE begin, which we're watching it happen right now, this has led to crypto going parabolic. Now, it's not an immediate reaction. It takes a little bit of time, and I would argue that Bitcoin is lagging behind gold and even behind stocks, but we will start to see this really pick up in a big way going into the end of the year. And this is also at the same exact time that fear and greed is still it's hovering right around 28, which is almost the same exact bottom going all the way back to 2024. So again, I feel like a lot of this, and I know that I've been repeating it, a lot of this has been exaggerated, and I would not be too concerned about this at all. So watch, wait, and see what we see with the Fed, I feel like it's going to be very bullish next week. But also on top of that, a few things to keep in mind is just really lock in on the factors contributing to markets expanding, aka, increased liquidity provisions, major announcements around, buybacks from the Treasury or even the Fed. But also on top of that, watch for the debt to continue to rise, because with increased debt, assets become even more lucrative to investors, which means crypto will see even bigger inflows. But with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.